Welcome to Cultivated Live for this Monday. What is it, May 11th? Yikes. I am Jay Rosenthal. That is Jeremy Burke. He's my co-founder, our editor-in-chief. In the middle is Mike Gorenstein from Cronos. We do this, seems like on a quarterly basis, almost exactly quarterly basis. That's how I know that 3 months have passed. Mike, welcome.
Thanks for having me.
And go ahead, Jer.
No, I was just going to say, Mike, you guys had a pretty good quarter. So why don't you start off, give us a little bit of the top line, nice earnings beat for you guys. What was good about the quarter? What are you looking for next quarter?
Yeah, I think it was pretty clean quarter across the board. So, we grew in every market we're in. We nearly doubled in the international markets. We're up 53% in Israel. Moved the number one vape brand in Canada. So all categories, all markets, and that's generally what you what you want to see. A big thing is we've been capacity constrained for a while, and so we were able to get our expansion finished. And so this is there's still work to do on dialing in efficiencies. Like Q4, it was like kind of a transition period where you're getting the new harvest getting new harvest through, and like that first cycle is always a little like rougher as you dial things in, trying to like ramp up labor. But I think this quarter is kind of like closer to like a baseline. There's still more to go, but as far as efficiency, so I think that's kind of like where what's driving it. So pretty happy, and going forward, more of the same. Just need to keep growing. A big initiative for us is closing the Netherlands acquisition, and that's something we're looking forward to.
Something that's happened between the last time we talked and now has happened in the U.S. with the announcement from the administration around rescheduling and what that means. What does that actually mean for you, if anything? And I have a follow-up question too, but first, what does it mean for you, if anything?
Yeah. Look, it could mean a lot. I think that you probably hear this from a lot of people. It's pretty complicated on what it actually means and what happens. So, just the actual rescheduling, there's going to be challenge, or there already are some challenges. So that has to make its way through the courts, see how that holds up. Rescheduling also being split between medical and adult use. How licenses get split, that's obviously a question, what that means. That's actually not, I think, as difficult as some people make it out to be, just maybe for certain companies. But for kind of looking and picking where to enter, that does make it, kind of clear on how it might have to happen. I don't think June 29th is going to be the end of some of the clarity, probably more of the beginning of the process of clarity coming. But for me, I think what's most important is, when the sort of details kind of emerge and we get some clarity, what's going to happen for interstate. So if you think about adult use versus medical, and when you think about, like the way that I've always thought of the US and generally, globally, is I'm kind of a believer that a good strategy is if you produce where it is less expensive to produce and you sell where the prices are higher.
Get your MBA here. Yeah.
If you think about what that could mean for the US as well, you always have a higher cost of distribution. You wouldn't say always. You kind of have a built-in cost of customer acquisition with medical because of prescriptions, having to go through that type of channel. But what that may open up is interstate commerce, and that can get really interesting, where you then sort of the inefficiencies of the California, Oregon, Washington, basically all the West Coast markets where it's been cheaper to produce versus say the East Coast, where it's it's a little bit higher prices, but cost is a lot higher. And a lot of the companies now, the reason that the prices are so different is you just have these local facilities that weren't necessarily built for scale, depending on the regulations. That could open up, and the timing of it opening up is going to be something to watch, whether that's the states doing it themselves or whether that is legal challenges, because the states absolutely can say, no, we don't want, like there's a history of states saying they don't want interstate commerce. That's gone on for, I'd say, centuries. And there's also a history of the Supreme Court saying that's too bad, there's going to be interstate commerce. So, how that unfolds, is it going to be something that the states embrace? Is it going to be someone, getting a truck and driving it across state lines and holding a press conference until someone comes to try to stop them and they challenge it. There's a lot of different ways that could play out. So how the regs break down will dictate how those challenges may or may not happen. What does that mean internationally? So if you're allowed to bring product in state to state, if it's Schedule 3 and it's considered international, does that mean that you're allowed to import and export not just within the states but internationally? So what is that going to open up both from export and import opportunities? And so I've always looked at this as a world where eventually things, especially in the medical market, is really a global market, and how those pieces fit together. And having those types of cost efficiencies can obviously dictate what the strategy is, how you enter. So it's probably a really long answer to how we're thinking of it, but
where you ended is the follow-up question. And
yeah,
I was just at an event in New Jersey, and other people were at events in Ohio, and there's I'm going to say big hope or wish casting that there will be exports from the U.S. to other places around the world. And my caveat to them is it's much harder than you think. That's what I want to ask you, Mike. You've done this. Setting up a compliant operation in the Canadian landscape is different. It's far different than the grows, certainly in most of the U.S. Like, how challenging it is from an operational perspective to get a EU GMP facility that is available to export to other countries to get set up, if that's not how you intended it to be in the first place?
I mean, I guess everything is just a question of time, money, and expertise. And, if you want to do it, you can figure out a way to do it. I think that it's definitely a different business model, but it also depends on the state, how much you have to go. So the earlier states tended to be sort of like looser, regulatory wise. And so the production standards might be a bit further. If you have an outdoor grow, that's going to be, I think, extremely difficult. Some of the, like if you think of like a early RO in New York, it was extremely strict, or like Nevada was extremely strict. So some of those states, you'd be more likely to be able to, make some changes, get online and export. But if you're like a big kind of like retrofitted greenhouse or, outdoor grow with an extraction facility, it's going to be a little bit more work. And then the next question is, do you have the cost structure where it's going to actually make sense? Because there's a lot of work and things to do, but it really, really depends on the company. I think it's hard to paint the U.S. with a broad brush and be like, okay, it'll make sense here or there. You could see it happening a few ways, like whether that's interstate, whether it's international. There's definitely options, but I don't know the market. Like if you think about the size of the U.S. market and the volume versus the size of Europe, at least today, there's a much bigger market in the U.S. than in Europe. It's like adding another state. So I don't think it's going to solve this idea that will solve all these problems and for all the expenses. It's not like you're bringing in, I mean, Colorado is probably bigger than I think Colorado is bigger than Germany, especially on a unit. So I think it's a talking point. I think people will certainly want to pursue it, but I think that interstate is probably going to be more relevant and a lot easier to do. So it's probably what most people will ultimately settle on. But it's sort of like on the other side, oh, what can we do here? And the other problem that I think people don't think about is currency is a real thing, right? So it's when you factor all that in, you factor in the scale, just because of the way that, there are some facilities in the U.S. That are like reasonable scale. Most of the companies that are at real scale, it's because they have so many facilities, not necessarily one facility.
I see.
Just because, if you think about it, right? Like, and maybe more on the West Coast, you have more, say, scaled facilities, but currency will factor in. So when you compare price points, that's definitely going to matter. But I don't know that there'll be a ton of let's build in the U.S. for export. You'd probably build in a lower cost jurisdiction. The advantage of being the U.S. is still that you access the U.S. market. So I think it can be used for some excess. I think certain companies will have opportunities, but I don't know if you're going to see a shift where then suddenly every U.S. company is like, all right, forget the U.S. We're going to, we're going to go to Europe now. A couple will do it, but probably not going to be a dramatic shift.
Mike, you alluded to this a little bit, and I want to sort of ask the kind of obvious question. with medical rescheduling in the US, does that become an attractive market for Cronos, for Canadian companies? Is that something you're looking at providing and exporting? How are you thinking about that, the medical side particularly?
Yeah, I think it's look. I think it again depends on how it works, how it plays out. I think it's always kind of the U.S. has always been our end goal, like from the beginning. And
Right.
Came to the U.S., went to Canada. Was like, how do we get this thing set up?
Yeah.
Yeah, it's just I think how it gets access. It doesn't necessarily have to be export, right? They're depending on how things are set up. We can absolutely establish or turn on infrastructure in the U.S. We already have partnerships in the U.S. and a lot of relationships. I think you've seen also in the way that we've kind of expanded. We can be asset light. We have products and IP that can move across borders, or farmers that are we've got partnerships already that they've got assets in the US we could turn on. So it just depends on what the market structure looks like. And I think that one of the questions is it gonna, when you factor in 280E relief, when you factor in the ability to do interstate commerce, how disruptive does medical become to adult use markets?
Right.
And
right.
It could be extremely attractive. It could be just, incremental opportunity. It all depends on how how things develop from a reg perspective.
Which we talked to you about before. Banking your business on regs that you have no control over can be a fool's errand. That was my words, not yours, but you did say something like that one time when we talked to you.
No, that's right. I think you can't like make a bet on it. And part of that's flexibility, having optionality, and in an industry where the regs are this volatile and the regs dictate what your opportunities are, you want to maximize your optionality. And we have what we need today to be able to enter any market. So, we're not reliant on capital markets. We're not relying on some new development. If and when we see an opportunity, we've got a kind of crazy board with all these different decision trees of what we would do. But the important thing is we know our products work across different borders and work in different countries with different rules. We know how to produce. We have great genetics that we could bring. We have great SOPs. So it's just understanding what the landscape is and then kind of picking our spot and moving.
I think you were just referencing sort of the regulatory landscape, which at some point can sort of calm down, and the regs you're dealing with, right? Like in Israel or other places. But then there's the economic impact as well. There's sort of world events, and certainly Israel is a major market for you. One is sort of the Mideast conflict and how that's impacted things, but also fuel costs, right? If you're shipping things around the world, like how do you think about that? How does that impact you? And then again, how do you plan for that, not knowing what's going to happen in next week with gas prices, but also sort of ongoing with freight?
Yeah, it's also not just shipping. Don't forget that the biggest cost in cannabis production is energy, right? Mm-hmm. So, fortunately, we have a pretty efficient production platform. We there's some things that we've hedged on. There's different optimizations we have for how to buy and sell back with the grid. But that's a major thing. And how do you deal with energy? But also it's not, like shipping matters. There's also plastics and other things that, that was actually my biggest fear. It didn't end up coming to fruition, but if the strait was closed for longer, there's certain plastics that you would start having shortages on. Mm-hmm. So, I'm glad that kind of crisis was averted, but it's something that, well, I guess if it's coming, you can kind of
you play for
it. But it's something that you have to understand. It's a reality. Every industry deals with it. It's if you need to pass something on, you pass it on. But that's why you just have to stay kind of lean and disciplined, so that when you do have price shocks like that, you can absorb them. Israel, it's I feel like every other quarter, unfortunately, we're talking about like the geopolitical environment. It'll be hopefully one day it changes and it'll be a really big relief, and it'll be, great. But in the meantime, that's just our reality. And like, we have to learn how to deal with it. And I think we have learned how to deal with it.
Mm-hmm.
Yeah. Mike, we're talking a lot about regulatory opportunity. I want to stick on the balance sheet for a second. you have a lot of cash on hand. I think is 822 million. I haven't digested the full picture yet, but that's a lot of not to use a jargon, but a lot of dry powder, right? How are you thinking about that? And can we expect deals coming up this year?
Yeah, I think we are always opportunistic. I'd say that, over the last year, you've also seen us be pretty active with our buyback, especially this past quarter.
Yeah.
I'd say we love the opportunity buying our own stock, and that's something we continue to do. We're looking to close Cannabis soon, but that's not stopping us from any additional M&A. It's just finding things where it makes sense, and it makes sense strategically. It's something that we think that there's a fit. We can integrate it well, and can we operate it better? But the two big buckets, and our strategy really hasn't changed on M&A. It's just, when is there something that's a fit? It's is there like IP, whether it's like IP, actual product formulations, production methodologies, brands, anything that kind of fits in, like it inputs into a machine, or is there something that it expands the machine, something that makes the platform bigger? So the Netherlands would be an example of something that makes the platform bigger, and then all the inputs, ingredients we can put in there, and then there may be a brand or products that we're like, okay, we really like this, or this resonates well, and then that's something that we can put in all the expanding platforms. So I know that's really general, but that's, as you look at any market, those are the two things I'm looking at. Is this a brand I can take elsewhere as well? Is this something that will be more efficient everywhere? Or is this, a platform that all the efficient and, efficiencies and brands that we've developed or acquired, I can plug in here? And one of those two things have to make sense. Otherwise, I'm just kind of paying a premium for a business that can be run the same, and it doesn't really help our shareholders.
You don't need to shit on competitors, but do you see when you see others make deals, because there has been some deal making in the past 3-6 months, do you look at that and say they're not doing either one of those two things, they're just doing it to do it? You don't even need to name names, but do you see the opposite being done that doesn't make sense for people to sort of the deal making to happen, other than some are distressed and they have to get out?
I'll say that it would be very rare that there is a deal that you see someone do where they didn't at least come to check and see if we were interested in it. And if we were interested in it. That's a really
diplomatic way of saying that. Yeah. They see the balance sheet too.
Yeah, no, yes. we're I think any banker kind of puts us to the list, and we get, we have a lot of inbound. So if it was a deal that I would have done, you would have seen it.
Yeah.
I like that. Okay.
Yeah.
That's a nice way of saying that. It's like in professional sports when someone clears waivers, they have to go through they're dropped by their team, then they're dropped by every other team, and then they're available. That's sort of maybe some of the deals that we've seen.
Yeah, everyone has different situations and different circumstances, but
But I'll go back to something you said, but the landscape is changing in the U.S. in some ways, and so, I mean, I'm not going to read too much into anything you said, but that's also true, right? The regulatory landscape is changing, and we're some of the operators are more mature than they were 6, 10, 12 months ago.
Yeah, and there's also different, sometimes it's almost like a survival thing where and it depends if you use, our currency is cash, right? We're buying our shares, we're not issuing them. And if you're in a position where you have debt and your business isn't profitable, and you're okay, I need to go, and maybe I don't like the price tag for it, but for someone else, I'll give up X percentage of my equity because I need to keep getting things that generate cash so that eventually I can cover my interest. That's a completely different calculus. So for me, it's how do I do something that's going to grow earnings per share? And for someone else, it might be, how do I figure out a way to repay my debt or not be in default? So it's not fair to say that it's necessarily a bad deal if someone does it. Just we're in different circumstances, and why we might do things are completely different.
Mm-hmm. Mm-hmm. Jared, what do you got?
No, that's it. I think that was good. I like the deal framework. We're gonna clip that and use that. And every time we see a deal cross the wire, we're gonna say, "Is this Mike's?
Right.
This is the Mike G
Here's Mike's
framework."
part.
Yeah, the box. Yeah.
But I think you're right, Mike, because the other thing is people may say, what is your motivation is different than another company's motivation.
Yeah.
Where they maybe, well, stay out of default for sure, but also trying to gain market share really any way possible, or take over a new territory without, without having to do the legwork, do it quickly. Like, it could be a million different things.
Also, what's your time horizon? How are you looking at it? And I'm kind of looking at where things are going to be. And, my time horizon's like, I'd say I rarely think of anything as like under 5 years, unless it's going to pay back for sure in under 5 years. And so it's where are things going? And I factor in, price compression. I factor in, regulatory changes that are likely to happen. And while I may not buy on them, if it's like, I think this is a pretty good chance, I might say, okay, I'm going to, hold off. What type of competitive forces are come in, what type of technology is going to change things. And those are all things that you need to factor in. And these cycles just repeat itself, right? So I've just been through enough of these cycles, and every time each new market will always start off by telling you why what's happened in every other market isn't going to happen in your market. And I kind of like nod, and then we don't have a tracker on it, but I'm sure we could track it. Then a few years later, they would say like, "Well, this has happened." I'm like, "Yes, we."
Well, we have a data partner, and they track the price of an eighth across 5 markets in the Northeast, and eventually everybody will just be. I think it's Massachusetts at $23, right? Like, some of them are at the mid 30s right now, New Jersey, New York, but at some point they're going to be $23 because that's just the way it happens.
We also have to factor in, let's say you have interstate commerce, it's going to convert maybe you have difference because like you're, in like New York, you've got higher real estate costs. So at retail, it's going to be a little more expensive. You've got higher minimum wages, and, that's something, and what the price is going to be in a city versus, in suburbs like that. There can be changes like that, but you're still going to have e-commerce as a normalizer. So there's all these different things that, that factor in. And that's another point for, rescheduling is once there's a medically federally legal, that means that suddenly the mail opens up, right? Because it's not, all those changes you have to factor in, and it's not always just what is your EBITDA, what is your revenue today. It's what's it going to be when these changes that are coming are going to happen.
Well, we've even sort of played regulatory fantasy land. Like, what if a state like California, maybe the most likely, to say it's all medical, right? Then all of a sudden, I don't know if they would do that, but like increase what counts as medical cannabis, and then all of a sudden you have a really interesting thing happening there where, who knows? I don't know what regulator is interested in that, but if you lower the threshold of what counts as medical cannabis.
Yeah, I think it just becomes a subscription model essentially, right? Like, so you're still gonna have a cost of prescription, but then the question is like, if let's say if you're a producer, like the way I would think of it is like, all right, well, if I absorb the cost of a prescription, is that cost going to be more or less than the taxes I would pay if I was adult use? Right. And how do I change my business model to account for that? But I think maybe what the biggest impact for California, Oregon, Washington is going to be, and why I think they're going to go medical, isn't necessarily taxes locally. It's going to be, can you then access the market, in New York and Massachusetts and Illinois? Like, that's where there's going to be some tension between the states. And again, when you look at market size, I don't think that the answer to every state's problem, and they'll figure this out really quick when someone starts modeling it, is, Europe is not going to answer every single, because of the size of all the states turning on. So, I don't expect that every state's going to be like, we're going to welcome imports and exports immediately. But I think that, it's been a while since law school, but I think that this last time I checked, the dormant commerce clause is still undefeated. So,
there you go. With that, Mike, thank you so much for spending time this morning. We appreciate that as always. And we look forward to seeing you in, 3-ish months.
All right. Sounds good. Thanks.
Great. Thanks, Mike. Thanks, Jeremy. We'll be back again
Thanks, Mike.
Later this week. Thanks, everybody.